Good evening, everybody. This is Jeff Scott. As you could see, it's March 9th, 2014. Since I did my regular webinar on Saturday, I thought on Sunday I would go ahead and I would do a very quick indicator education program talking about the indicator set that I've provided to those that attended the New York City meeting, and several have asked me to purchase it. This will probably take about a half hour. Everybody knows I can never talk for a short period of time. If the resolution looks fishy, it's because I've toned down the resolution on my monitor, and I actually went and brought a new computer so I could build it from the ground up and be able to make sure that everything that I give you is going to work on a new install of TradeStation and not necessarily be tied to my other indicator sets. So let me start, as always, with a very not so brief PowerPoint. Go through this quickly if you've seen this before. Disclaimer, this is for educational purposes only. Anything I recommend is in the spirit of education, not investment advice. I'm a doctor, not a broker. You should be aware that most physicians lose money with their investments, and I am independent and not affiliated with any software company. I paid for everything that I use and that I demonstrate, and I paid a third-party programmer to create these indicators based upon published, publicly available formulas. So a couple of key additions to the disclaimer regarding the indicators. The user of these indicators is granted an individual license to use these indicators on a single TradeStation customer number. I will show you where the customer number is. You'll need to send that to me if you want to purchase these. You can have 45 different computers with TradeStation. You can use one of those at a time based upon TradeStation's rules, but you can put my indicators on every one of those as long as they're tied to your number. These indicators are tied to you and should not be shared, sold, or loaned to any other party. They're offered for educational purposes only. There's no expressed, written, intended, or unintended guarantee of accuracy, effectiveness, or success, and they're offered as is with no warranty. To use my indicators, you'll need to have an active TradeStation account with data that will work with radar screen in real time, scanning end of day, and charting real time. We'll talk about the end of day scanning in a bit. Use of radar screen within TradeStation requires a subscription for use of radar screen. In most cases, this is not provided for free and must be requested. Now, when you start up TradeStation, you start your account, you probably got radar screen for free. If you're lucky, you got a 1 or 2 years of free radar screen. If you have $100,000 deposited at TradeStation, you get free radar screen. You must have active radar screen to use radar screen. You can use end of day scanning and the charting module whether you have radar screen or not. The package that I'm offering for sale includes failed new lows, which is a green candle low, failed new highs, which is a red candle high, Bible gap ups, pocket pivots, squeeze, mobile breakouts and breakdowns, mobile breakouts or breakdowns occurring at a squeeze, ice hole failure, and the high jump bar. I probably won't talk about ice hole failure again. This was a teaching of David Elliott, may rest in peace, from First Wave Traders, which website is down. He passed away about 18 months ago. An ice hole failure was if a stock trades up to a major moving average, let's say the 50-day moving average, and fails to break above that moving average, it's likely to continue to fall down and take out the prior low. Now, think about an unfortunate fisherman who falls into a lake that's covered with ice, and the current takes him away from where he fell in. It's very hard to get above that ice, and an ice hole failure occurs because it's often difficult to get above resistance at a major moving average. The rest of these I'll talk about in more detail. Each indicator works, as I said, as an indicator for the charts, on radar screens, or as a TradeStation scanning tool. Now, I don't for a minute want you to think that I created these out of the air and that they're not available anywhere else. Anybody that watches my weekly webinars know that I am a huge fan of HGSI, which can be found at www.highgrowthstock.com. It is $5.99 a year, including data. It's got best-in-class end-of-day charting and scanning. I highly recommend it. These indicators are an adjunct and not a replacement for. Now, Thinkorswim is another excellent platform. Like TradeStation, it requires an active brokerage account. These are a little bit more freely available, and anybody that attends any of the Palos Verdes HTSI meetings will get this indicator set for Thinkorswim at no charge, not provided by me, but we have our own resident ThinkScripter as part of that group. Now, quickly, the advantages of HTSI. If you watch my top-down review, I can't do that with TradeStation or Thinkorswim. The way that I can look at the markets, the sectors and industries, and then the components of those sectors and industries, the way that I can use various indicators, create my own indicators, modify them for scanning, and the outstanding charting of end of day for HTSI makes it an unbelievable bargain. In fact, it should be $1,599 a year for what you get. Thinkorswim is free. To get real-time data, you need to have an account there. It comes with a very robust data set, and some of the indicators, such as squeeze and the MOBO, are built in already into Thinkorswim. TradeStation, the benefit of TradeStation over Thinkorswim, in my mind, is much related to the radar screen, where I can have 1,000 symbols with many different indicators scanning real-time during the day, giving me clues. In fact, that radar screen to me is the reason why I will not give up my TradeStation. Thinkorswim has MarketWatch, and it has scanning, both of which are excellent, but they're limited in the number of symbols, the number of fields, and frankly, because of current server issues, they don't even work during the market the way they're supposed to. But that's a different story altogether. Why TradeStation in addition to HTSI? Well, the real-time quotes, multi-time frame charting, including intraday, the radar screen with 1,000 symbols, the scanner. Now, I put a question mark after end of day because one of the New York City attendees, Jim Cooper, who has a website, chartsyandchat.com, and a number of other nice sites, and who's a TradeStation programmer, told me he can get this to work during the market. So, Jim, if you're watching this, how about giving me a free go-to-meeting session and showing me how to make that happen? Indicators can also be set up to trigger buy and sell and in my trades, which I do. Another reason why TradeStation is good is because their app store creates a marketplace that encourages extensive outside supported product by independent coders. Here's a big note. I do not use TradeStation as a replacement for HTSI, as HTSI offers considerable advantages as an end-of-day tool. That big advantage, most of it is speed. Now, I mentioned PV meeting. I can never forget to pump this a little bit. Best meetings you'll ever go to, 1275. This is definitely going to be Ian's last meeting live in PV, where we think we can extend his career as the world's best investor, trader, educator that I've ever met by piping him in online, which will give us some flexibility in meeting locations. And Ron and I have had some discussions about future meetings, but this is probably the last one that Ian will be at live. So highly recommend it. Go to HTSI or highgrowstock.com under events, and you could register. I've heard there's still seats available. Not going to spend any time here except to say that the majority of the indicators that I put together have come from the people that are mentioned here. The high jump bar and kahunas come from Ian Woodward and Ron Brown. The force index comes from Alexander Elder. The philosophy of CanSlim, which I follow, but the CanSlim on steroids that I learned from Morales and Katcher, the O'Neill disciples, Bible gap ups and pocket pivots come from them. Other things that are important, David Elliott, who I mentioned, who's deceased, many of the things that we're going to talk about, I learned from him, and also John Carter's squeeze. Again, each of the indicators that I'm providing are publicly available as formulas, and I incurred costs in creating them, which is what selling them defers. I hired a TradeStation programmer to put them together. Now, I've built my toolbox over the years from reading, observing others, and attending the PV meeting. And again, from Ian and Ron, I learned how to harness the power of Richard Arms with Eurekas and Phoenixes. To maximize John Bollinger with kahunas, %B and bandwidth. From Elder, it's the force index. From Morales and Catcher, it's those pocket pivots, Bible gap ups, and punch bowl of death. Gang of 5, which I participated in, was the bongo indicator. And some of the great things from Ian, especially free parking, the high jump, as well as the bingo and the Hindenburg. And then George Lee reintroduced me to the work of David Elliott, the mobile breakouts and breakdowns, the failed new highs and new lows. And John Carter's been around for some time with his squeeze. I like to buy pullbacks that show momentum as they start to make their move, whether it's up or down. So I want pullback to support, and then I want evidence of momentum and direction change. So I use my bongos, the force, as to show me pullbacks. So on both the bongo and the force, when the long term is green and the short term indicator goes red, that implies you're in an uptrend with a pullback. Squeeze, as the Bollinger Bands pinch, that could be evidence by themselves of a volatility squeeze. Free parking, pulling back to the 50-day moving average. Changes in direction, DI crossovers, MACD divergences. Failed new highs and new lows, the red candle highs and the green candle lows from David Elliott. I look for momentum. It could be the kahuna. I don't think I go into the kahuna anymore, but let me tell you what the kahuna is. It's a %B change of greater than 0.24 for a little kahuna or 0.40 for a big kahuna. That means that a stock moves either 24 or 40% of the width of the Bollinger Bands at a single day trading bar, daily or whatever you're using. And to me, they signify some momentum coming into the market, as do pocket pivots and Bible gap ups from Gil Morales and Chris Catcher. PSAR reversals, which is something that's standard in TradeStation from Wilder, and then the mobile breakouts and breakdowns from Elliott. So what will come in my set will be the squeeze, the failed new highs and new lows, pocket pivots and Bible gap ups, and mobile breakouts and breakdowns. Also the high jump bar, which I'll explain at some point as we go forward. The other things here, MACD crossover, MACD divergence and crossover, DI crossovers, force indexes, and frankly, the kahuna with %B are all standard in TradeStation. Now, just to go back to HGSI, in HGSI, we're able to build scans and filters to look at the market and to also chart all these things I talked about. And these do come standard if you add my add-on, which has no cost within HGSI. And in fact, in HGSI, I'm able to plot on a single chart everything that I just talked about, from bongos, accumulation distribution, force, the high jump, the green candle lows, red candle highs, DMI crossovers, Bible gap up, squeeze, MOBO, moving averages, pocket pivots, Bollinger Bands, Phoenixes and Eurekas and kahunas. Now, if you're new to me, you have no idea what I just said, I would refer you to my YouTube site. And if you're going to search, look for JAS Cancerdoc, CANCERDOC, and you'll find hundreds of videos that I've done, or go to the highgrowstock.com website, and under strategy, investing strategies, you'll see my name, and that'll bring you to my blog. So let's go into a brief explanation of the indicators that I'm providing. A couple of them, I should have added high jump here, but MOBO, squeeze, Bible gap up, pocket pivots, my dots, and the high jump. So MOBO is you see wallstreetteachers.com. This is David Elliott's old site. And these are identifying price breakouts from the noise and chop seen on time periods. They are modifications of the Bollinger Band. Unlike Bollinger Bands, I'm sorry if that thing was in the wrong place. Unlike Bollinger Bands, which really don't tell me when to buy or sell, I do know in times of contraction that there might be some volatility breakouts coming in. The mobile breakouts, as price moves above the green bar or below the lower green bar, give you the mobile breakouts and breakdown symbols. And there are specific rules for trading MOBO. Buy when the price moves above the MOBO, exit when below the lower band, which I would consider this to be, and this are the bars in green, a late exit, or when it moves back into chop, which would be an earlier exit. A mobile breakdown is you sell your instrument when it breaks below the lower band, and you cover when it goes above the upper band or when it goes back into chop. I don't want to spend a lot of time on the rules as much as I want to spend on the indicators and how I use them. The squeeze index comes from John Carter. Here's his excellent book, Mastering the Trade. It's a volatility play which utilizes and combines Bollinger Bands and Keltner channels, periods of contracting volatility, and major moves have been known to occur with a breakout from a volatility squeeze. Here is a squeeze scan which I obtained from George Lee, who is an outstanding lecturer and trader. And basically this is the formula if you want to do it yourself, and it represents where the Bollinger Bands contract inside Keltner channels and signify a compression of volatility. There are other definitions of a squeeze. I use this one. It helps me to find setups, and then I look for candidate positions to break above or below from the squeeze. And you could see in HGSI, we're actually printing yellow. The other charts are HGSI as well. I should have mentioned that here. And you could see actually the MOBO breakouts in green and breakdowns in red. And you could see as they occur within a squeeze in yellow. And you could see the squeeze is when the Bollinger Bands contract. As I mentioned before, we can look at all this within HGSI. Let's go back up here real quick. I mentioned failed new highs and failed new lows. These are the scripts for them. If you want to create your own indicators, green candle lows, red candle highs. I use these to scan for failed new highs and new lows. David Elliott taught us that these could be powerful reversal signs. These are setups, not triggers. They alert one to a possible change in trend direction and potential beginning of a wave 3 move. You can easily program the script into TOS, TradeStation, or your favorite program for real-time scanning. And it is now part of HGSI natively, which is excellent. Pocket pivots, these come from Gil Morales and Chris Katcher. You can read the definition yourself. These are hard-coded in HGSI, and I've coded them for TradeStation. They're also available for Thinkorswim. Basically, these are large volumes. So the key to me is, where is the definition on the volume? The day's volume should be larger than the highest down. If it's a pocket pivot up, today's volume should be larger than the highest down volume over the prior 10 days. So you're seeing an unusual volume, at least over the last 10 days, and it's signifying to me a momentum perhaps coming in. And you want to see it should act constructively around the 10-day moving average. I refer you to their books. They are outstanding, or to their website, Gilmore Report or Virtue of Selfish Investing, where they have a number of educational endeavors, including live webinars. The Bible gap ups, these occur in great stocks, and although many of us might be afraid in a stock that's had a nice run to buy a gap, Gil and Chris have re-educated me as to the importance of gaps, and that specifics of their Bible gap ups, which are written here. 0.75 times the stock's 40-day ATR is the amount of the gap or more. Must have 150% of the 50-day moving average of volume, and they should occur within an uptrend or constructive consolidation, not in a downtrend. They have a number of sell rules, but these have produced some very big winners for me ever since I read their books. Here's those green candle lows and highs again. A few comments about the high jump bar. The high jump bar is something that was brought to us by Ian Woodward. Ian has been termed by John Bollinger in Stocks and Commodities as one of the greatest analysts of our time, and it has been my pleasure and honor to have known Ian for 20 years or so. He certainly made a big difference in my trading and in my family's security, to be honest about it. One of the things that's helped me a lot is this high jump bar. Now, the high jump bar basically measures the extension of a stock by adding the distance between the stock's closing price and that of the 17-day, the closing price to the 50-day, and the closing price to the 200-day. So adding those three different distances together and plotting them. In HGSI, what this looks like is this line here. And when the line gets up to the top, and it's really not the absolute number that matters, but when it gets to the top, it usually signifies a top in the instrument, and either it goes sideways until the moving averages catch up and let the rubber band have some of its rubber back, or it can snap down pretty hard. So these high jump bars are great signals, especially when you combine them as I do in HDSI with my red candle highs. I'm very reluctant to buy stocks that are having a red candle high at the high jump bar. Now, one of the problems with this is that I have to be looking at the chart for this to have meaning. So I was able to code it where it looks back so many bars, and then it tells me what percent today's high jump is over the whatever time I program in. So this way I can look at a number in radar screen where 100 would be the highest, and it gives me an idea of stocks that might be overextended. Lastly, I've combined everything with my dots, and so you could plot these separate, you can change the shapes, but basically these are the list of what these dots cover. On the bottom we have kahuna forces. These occur when you have a kahuna and both force indexes are in the same direction. They are big momentum drivers. The next one up would be my green candle lows and red candle highs. Then I have my PSAR, green when it's below price, red when it's above price. In yellow I have my squeeze. Above the squeeze I have my MOBO breakdowns and breakouts. Above my MOBOs I have my pocket pivots up and pocket pivots down. To be honest, mathematically we can calculate what a pocket pivot down is. I've yet to see Gil or Chris use them. And then lastly, my buyable gap ups. So you can change colors, you can change the symbols, but what I want to do is be able to look down and see, oh, I got a squeeze coming, look at where my PSAR is and my MOBOs, and know that if above or below flip or fire, that I might have a signal of a trade. This is telling me a setup, and the MOBOs and the PSAR are some of the triggers I use, as are the pocket pivots, the buyable gap ups, and the kahuna force. So for more information, to learn about HDSI, including a free trial, no credit card necessary, go to www.highgrowthstock.com. For TOS indicators, come to PV meeting. All information is at highgrowthstock.com. For a TradeStation set, contact me at jeffrey@highgrowthstockdoc.com. So let me go ahead and review the installation and show you some of the power of my indicators. What you'll receive from me are a couple of things. First thing you're going to receive in the package, and if you came to New York, you receive this as well. So it says TradeStation EPS date for radar screen from Guru. This is not something I wrote, but this is something that's provided at no charge. And what it does is it creates an indicator that goes into earnings.com, which you do not need to register for, and pulls the earnings per share date out of earnings.com and puts it in your radar screen. If you open this up, most important thing here, NP Earnings Help, if you double click on that, it's going to tell you to install this package for the DLL to work, and then you copy the DLL to the TradeStation program file. So I'm using Windows 8, so basically I open up this PC, see Program Files 86, I find TradeStation 9.1, I look in Program, and into that area I want to copy this npearnings.dll. I've already done it, so I'm not going to do it again. Well, I guess I did, no worries. And then I want to double click on this NP earnings. Ignore that message, I get it all the time and it doesn't seem to mean anything. As you'll see, it's going to load it in here in a second. And I'm going to hit next, next, and I've already put it in there, so let's not redo it. And I'm going to shut down TradeStation. Exit TradeStation. So I've now installed my earnings indicator. So you're done with that one. And now I want you to open up my archive that should say something about like Scott package. It'll say something besides New York City Summit now. In my package, you're going to see Oh, you know what? I took something out of there. So let me bring this back over. I want this to be realistic. So let me go back over here and go into my Dropbox. So let me see where I put this. Yes, I have a lot of crap. I wanted to, all right, so it must be up here. I don't need this thing. I just want to make sure that you're getting the full effect here. Let's see, New York City. Scott package. Okay, that wasn't that hard, was it? Copy, paste. And then I'm going to overwrite. Yes. Okay. So this is very important if you're going to install my package. You're going to open up that directory. You've got four things that you have to do. First thing I want you to do is double click on Scott Scans. Then go to this PC. Find your TradeStation directory. You see there's something here called scans. What you're going to do is you're going to copy that, paste it. I forgot that. All right, perfect. You got a copy of that. And now I'm just going to rename that old scans. You're going to do that just in case I don't want to screw you up. You're now going to open up the scans, and you can see I've already done it, but you're going to copy each of these three things, and you're going to drag them in there. Now, I've already done it, so I'm not going to do it again, but that will make sure you'll get my scan. So you need, just as I just did, you will need to put that scan file inside your scans. Now, you don't have to make a backup, but you'd be trusting me a little bit more than you should, because if this screws up, I don't want to mess up your scanning function. It won't screw up, but if you have some proprietary things there, I don't want to be responsible for them. So that takes care of the scan. Second thing I'm going to do is I'm going to go back to where my TradeStation is. And in TradeStation, under my work, I'm going to drag these two files, the workspaces. I'm going to drag them here, and I'm not going to do them because I already did it, but you're going to put these two, I guess I did anyways, you're going to put those two files into your TradeStation, my work. Then you are going to double click on the ELD file, and you are going to actually do this, but I'm doing it real quick. So I'm not going to really do it. And there's all the things that we talked about: Bible gap ups, my dots, green candle low, red candle high is somewhere below, the high jump, ISO failure, mobile breakouts and breakdowns, combining those with the squeeze, the pocket pivots, the red candle high, the squeeze. And this one you won't be getting. I wasn't supposed to put that in there, which is a proprietary, although I don't think they're around anymore. Mobo bands, but that will not be in anybody's package, so you can ignore that one. So you're going to go ahead and finish, and I'm going to hit no to all because I put them in earlier today. So I've now loaded up everything into TradeStation. So I'm now going to open up TradeStation and show you how I use these indicators. So a couple of caveats. I borrowed one of my friend's developmental usernames and passwords. And the reason I did that is I wanted to make sure that all of this works for you and that you don't get into trouble because it is coded for me and my machine. So I've used a other person's machine. Oh, you're not going to like that. Oy. All right. I've used another person's machine so that I can prove that they're going to work inside yours and not in just mine. So a couple other things I want to talk to you about. I need you, if you're going to order these, you need to go under Help and About 9.1, and you need to send me your customer number. It doesn't give me any rights or anything except I can link my indicator set to your customer number. Okay. You'll notice here that I have update 24. They are up to update 25. I don't support anything before 24. It should update automatically unless you're blocking it. If you do not have at least update 24, then when you open up my workspaces, it's going to tell you it won't work with that version. Never fear, you can still rebuild them all, but it's easier if you can use my workspaces. So what I'm going to do is open up my workspaces. So remember we called them Scott Package and Scott Scanner. So let's go ahead and open those up. And I ran this earlier this evening. So on the Scott Package, show you what I'm doing here. What I have, and you can do whatever you want from the perspective of how you want these things to sit, but I've got two charts with my indicator sets on them. I have a daily and a weekly, and they are linked to my radar screen. And for now, I have this radar screen. As you can see, I've got last price, net change, bid ask, high, low, but then I have volume. I've got green candle lows, red candle highs, ice hole failure, squeezes, mobile breakouts, mobile breakdowns. I've combined mobile breakouts and mobile breakdowns with squeeze. I have pocket pivots, and I have Bible gap ups. And so what I would recommend you do is, you don't really need all these things. You could kill the mobile breakout and breakdown because you've already got them next to it. So I'm going to, I guess if I do one at a time, I think I have to. All right, so now I'm able to get my indicators in one view. I can make my charts smaller. Now, hopefully you've got modern resolution, which is now getting beyond the 1920 by 1080. And if you do, you can get a lot more information in your charts. So what I like to do, and I'm just going to open it all the way right now, is I like to be watching the market during the day, and I usually double click on Bible gap ups, and it shows me what's had a Bible gap up today. Now if I do this first thing in the morning, I am going to have nothing show up in this column, and I'm going to have everything that's had a gap show up in this column. I'm only looking at a small number of stocks, 200 stocks, not my usual list of 1,000, and so we only had one gapper that I picked up. Now, to be a Bible gap up, as I showed you before, I need to have an ATR length, 40-day ATR. I need to have the gap be 75% of that ATR. So once I trigger that number, this will be 100%, and it will turn color. So when it says 150, it means I'm 150% of that 75% of the 40-day ATR. From a volume perspective, you have to be 150% of the 50-day average volume, and this is showing you what percentage you are of that 150%. So 100% does not mean you've matched the previous volume. It means you are 150% of the 50-day volume. I then filter for the 50-day moving average because I don't really want Bible gap ups that are below the 50. All of these are user manipulable. So what I do is I look for the gaps. I look at where are my big volume movers. So rather than looking at absolute volume, these are the stocks that had the huge volume, at least 150% of their 50-day average volume. And then I might double click on Bible gap ups to see if there's any Bible gap ups. Now, during the day, it won't be so pretty because you're going to see areas where you have 000 showing up. You could have a red candle high that actually goes away and then comes back and then it goes away depending on an intertick movement. So if you see numbers but not a bar, that should tell you that it's triggered, but then it's come off the trigger. When the market closes, the bar is done, and so all the partial ones will go away. So if I want to know how many green candle lows there were in these 232 stocks, I see one. It was in the gap, which is one of the stocks I thought looked interesting. This weekend when I did my analysis. Not sure. This is probably related to my data set on this, not verified because it works fine, as you can see. If I want to see how many red candle highs, I can see we had a lot of red candle highs. That might make me nervous that we're about to see at least a short-term pause in this. Did we get any ISO failures? We did. So we might want to look at COP on the chart just to see what that looks like. These are the stocks that were squeezing. These are the ones that had mobile breakouts within a squeeze. These are mobile breakdowns. So these are stocks that you don't want to be owning necessarily. If I want to know who had pocket pivots up, I double click on pocket pivots up and it can show me during the day. These are stocks that met the rules for pocket pivots. Pocket pivots down, kind of equal. And then we looked at Bible gap ups. Let me show you how you add. I'm going to add to this the high jump that I gave you. Maybe I'm not. All right, it's in here somewhere. Is it already in here? I think it may only work on the charting. So perhaps it's not going to show up here because it's not set up for the scanner. All right, so nix that for right now. So this is the radar screen. If I want to look at the chart, so remember I mentioned COP was one that had an ISO failure. So I don't have the 50-day moving average on this, but if we did, we would probably find that it failed at the 50. So we can put a 50-day on just to, to prove that. Insert analysis technique. Oh, there's my high jump. It was probably right in my face. I'll go back and look for that one more time in a second. So we're going to look for moving average, one line. Okay. Now I want to go double click on that. And I want that to be a 50. Simple moving average, hit OK. And you could see how it works. This is really cool stuff. You can see how the price traded up to the 50 and it failed. These are those mobile bands which you can purchase from First Wave Trader if you can find them. You don't need them because you're getting the mobile breakout in the blue dot there and in the green dot over here. You're getting the mobile breakdown when it broke through the mobile band with the magenta dot there and the red dot right there. You're getting your squeeze here in the yellow. So just to review these, you got Kahuna forces. You've got a red candle. What was this? I'm trying to remember what I've got here. You don't have candlesticks, so it's hard to see that that's a red candle high. But for this to be a red candle high, it would need to have made a new high and closed lower than where it opened. So that would be a red candle, kind of a doji looking candle, but you had a red candle high there. This is a PSAR, says that the PSAR is below price, which it is. There is no squeeze in place right here. You have a mobile breakout as you broke above the bar, but you closed back within, so it didn't fire up here. You have, you can see pocket pivot volume here. And do we have a Bible gap up anywhere on this chart? Which one would have a Bible gap up? I know I don't have a Bible gap up. My favorite stock last week, PLUG. Notice the yellow dots here. These are denoting a Bible gap up. So you can also come down here and you can hit right click anywhere in the chart, go into Format Analysis Technique, and then go Combine Dots, and you're going to go into Format. Whoops, I don't want to turn them off. And I can go into Style. So the Bible gap up, let's make it a cross, and let's change it to yellow. And, well, I changed it. I'm going to have to, all right, change it to green. Let me go back in and see if I can change it to yellow. I know you can change the cross. Now, I guess you can't in this version change the color, but you can change these to make it easier on you. So you might want the Bible gap ups, the Mobo breakouts, and the Force Kahunas to become crosses. It might be easier to see. I like the picture this makes, and remember the squeeze is going to come across as yellow when you have a squeeze. So, just in summary, actually, let's see if I can make this work. Yeah, I guess it doesn't work. The high jump isn't working on my radar screen. All right, so it's not showing up as a radar screen tool. But let me show you real quickly why the high jump, how I think, improved upon Ian's great work. This is the high jump. Let's format it. And this high jump inputs are, here's the moving averages, 1750 and 200. So you can come up with other high jump bars. And then how many days I want to look back. So I picked 200. Let's say we could make it 240 for that matter. Let's see, it's 3842. If I look back 240 days, it's still 38% of the highest. So the bottom line is I know what that number means. This is probably the highest or getting to the highest. But I can look at the right edge here and I could see I had an ISO failure. The PSAR is below price, which is bullish. I had a 38.42 on the high jump bar. My PSAR here is green. I had a, looks like I did have a Mobo breakout here. I have to look at that a little bit closer, but I'm not squeezing. So I've tried to combine all of these. So at this point, if I was live, I'd ask questions, but I'm not live. So I'm going to shut down TradeStation because of my friend is trying to get into his account. He's probably cursing at me right now. The reason why I used his account again is because I wanted to prove to myself that these were unlocked and that you'll be able to use them on your machine. So let me just finish up with a last comment or two. This is the set that's for offer. If you already have it, this is what I promised you to show you how I use it. I'll continue to use it on my webinars. If you're interested in it, feel free to email me at jeffrey@highgrowthstockdoc.com. I remind everybody that it's cheaper just to go buy HGSI, where all of this is built in. Mind you, I recognize that HGSI is not a real-time, and you can't go intraday yet. So I would understand then why you would want to have both. And to learn more, I'll leave this up here, and then I'll say goodnight. Thank you, everybody. And thanks again for everybody that's purchased my indicator set. And more importantly, thank you to those that came and spent some time with us in New York City. Good night, everybody.